Dale. Ira Epstein with your agriculture wrap-up, and this is for Monday. And we are now September 30th, the last day of the quarter, last day of the month, 2019. A big up day in the grain market, and the reason for that was this. The corn quarterly stocks came out, according to the USDA, at 2.114 billion bushels. That's quite a bit down from the 2.430 estimate and June's numbers. This is a big, big reduction. So what the government finally did is they've decided to revise everything and go back in time and say we had too much on hand. When you look at soybeans, it's the same, 0.913 billion bushels versus the estimate of 0.982 versus the other estimates as you see going back. And yes, you're double what you were back at the last numbers in 2018, but it's still a big reduction, and that's what's important. In addition, it appears that China has given out more licenses and they're buying another 1 to 3 million metric tons of soybeans from the U.S. So coming into the October 10th meeting, they've certainly done a lot of soybeans. And now the question is pork. And of course, the other question you laugh at is when they say there's no tariffs. They've removed them. Of course, there's no tariffs. Why would they tariff themselves? So they remove the tariff. They give the licenses out. And U.S. beans, well, then they're somewhat competitive. If you take a look, though, the dollar index running dramatically against a number of foreign currencies. So that's something to always take into account. As we take a look on the weekly area chart of closes, you're right up into that resistance, and gosh, we've been talking about that 906 level for a long time, and here you are right back at it, just the level we've been talking about on the weekly charts. Now on the daily chart, you got through this last rally high right through here, and now you're into this congestion area that we've had. Can you run from here? Well, that's going to depend, obviously, on weather. Crop conditions are about where they were a week ago, so I'm not even going to show them on the board right here. Suffice to say, it was the reduction in stocks that the market reacted to, and it broke a pattern. If you take a look at how you were trading going into today, the market had a pattern at first of lower highs, lower lows. With today's action, I remove a red arrow that I would have had right here, and because you got through this number, 895.5, the arrow goes up. So you're not trending. You've got this wild action that's taking place on the sideways move right now. If you look at resistance, you could get up to the 200-day moving average of closes, and you haven't been back there since way here in the July time frame going into the summer. Remember that wet weather we had? So the market is coming back. I guess it's helping the farmer to a degree. If he hasn't, if he's lifted some of his hedges, he's probably in pretty good shape. 911.5 is the resistance there. Your Bollinger Band top is 913 3/4. So I'm going to look for resistance on the market between that 9 and 11.5, and let's call it the 915 area, because that Bollinger Band's going to jump tonight. It's jumping about 3 cents or so. So it's probably a little bit higher. When I look at momentum, you're overbought. In summary, what the market has done is it got up, had a big run, went sideways, came back finally to the 18-day moving average of closes, but in that whole time frame, it kept an upside bias. I define bias as the market having an upside bias when it's over the 18-day average, the red line, downside when it's under it. It acts as a filter on other technical indicators. So that's up, but you are overbought. When you go to the meal market, if we look at coming into today, you had a higher high, and you actually had a double bottom here. These numbers were the same. Today you got up and took out this high. So I'll just say that you've got this low right in through here. You went to the upper Bollinger Band. You've had sideways action in this market literally since the beginning of August. Can you break out to the upside? I say the upside because the bias is up and momentum's up. We have had failure upon failure at hitting that upper Bollinger Band until it shows that it can get over it. Not much I can tell you. If it gets over it, the next level of resistance, 309.10, the 100-day average of closes. When we come to soybean oil, it wasn't weak enough to even get to the 100 day average of closes, which was 28.65. The momentum is still down. You still have a downtrend in the sense that you've got lower highs and lower lows, but that downtrend gets negated if you take out 29.33, which is 25 points from where you finished. Let's assume that the market does that, just for the sake of discussion. Well, you'd have a lower low and a higher high. Where are the pros right now? They're probably still trying to see if they can hold the market from getting to that number versus the 18-day average of closes, and I'd guess that they go flat if the market gets over 29.33. In the corn market, we had sideways action going on for a long time, and with the action today, obviously without that quarterly stocks report, there's no pattern here, and today the market jumps off that news. So now you've got the lower low, higher high. If we take a look at momentum, if you take a look here, the numbers today, both numbers closed over 80. Numbers on Friday, they were not over 80. You're not embedded. You've got a market that had got embedded here. I want to show you on Tuesday. Let's come back one day. Here's Tuesday, embed. Day one of it. You need 3 days in a row to embed. Day two, day three. The only time you can lose it is now when the market gets under an 80 reading, but there's a big but. To get it back, it's the next day. If you don't get it back, got to go through the whole process. So you could have 3 days in a row over 80s, both numbers, lose it one day, but if you get it back on that fifth day, this market's embedded. And it doesn't have to be that exact sequence. You can stay embedded for 8 days in a row, lose one, and get it back the next day. And that's what it did. It got it back. So I call this a trap for the bears right here. And with that momentum back to embedded, it tells me that until the red line closes back under 80, the pros are going to buy this market on pullbacks. They'll keep selling into the Bollinger Band. If they don't get an opportunity to buy under it, could you go up to the 100-day average? Yes. Are there reasons to be short? No. Some of the pros might have gotten out at the Bollinger Band today. That I can understand. Just like in wheat. You get up to the first challenge of the upper Bollinger Band or 100-day average. The one thing I teach is that when that occurs, I expect the pros are taking money off the table. Why? Because you've hit key resistance areas. You're overbought in this case as well. I also teach that you don't buy over Bollinger Bands. You take money off the table on the first challenge of them, and we haven't been back up to a Bollinger Band in about 2 weeks, so that makes sense to me. The bias is certainly up. Sugar market stalling where we'd expect. You get up over the band, you pull back under it, you get back to it, and today's settlement was back under it, back here at the 1264 level. This market is overbought in a resistance zone. Yes, the trend is up. That doesn't mean the pros aren't taking money off the table. Should you get another surge, I would still think they'd be coming out of 1291. Do you remember when we lost the embedded reading here and we were talking, where's this market going? First number was the potential. The word is potential for the upper Bollinger Band. And if it cleared it, we were looking at the 100-day average. Well, it's taken a while, but that potential didn't go away. And here you are, and you're still making that move, so to speak. In the coffee market is bullish. The market has higher lows, higher highs. Resistance is 102.84. The support's back at 132. I would think the pros are going to stay bullish until you take out today's low. You have an outside day up. I would expect that resistance to show here and again at the upper Bollinger Band. Take out today's low, and I think you capture a group of people long here and you get what's called an ugly chart pattern out of it. In the cocoa market, I'd be very cautious now. This market acts like a market that wants to come back down for a change. You still have the embedded reading, but you closed at the day's low. When you do that and you reopen, you often, when you've got a reading that's starting to turn down as sharp as it is, and just over 80, lose the embedded reading. So I would think some of the pros actually came out today. If they do anything, they'll look to see how the support is down here. My dilemma is if you take out 24.33 and you're at 24.42, you lose the swing line, you turn the momentum down, and you probably put into play this area, but that doesn't mean it's a buy over there. In the cotton market, we've had churn upon churn against this 18-day average for over a week now. Momentum is flat. The bias is up. You have a lower low, higher high pattern. It's a real son of a gun to do anything. I didn't see anything at the end of the day in the crop conditions to lift the market. Now in the beef and in the pork, what we're looking at are markets that are still having to deal with what? First off, they're looking at the price of grain. Second, they're looking at consumer demand for these products. And look at how this beef price has gone shooting up. So eventually that's going to show up in the supermarket. You've got this market with an embedded reading, which tells me that while we hit the resistance on Friday at the upper Bollinger Band, pullback should still be well supported till that red line closes under 80. The same in the feeder cattle. This market rode the upper Bollinger Band. It's moving to the right-hand side. First support back at the 100-day average, resistance the upper Bollinger Band, and in the hog market, a big outside day up. We had a pork report, the pig crop report, come out on Friday. I thought it looked a bit friendly, but I think the market's not running on that as much as it's running on hope. Hope and prayer that something gets done in the pork and bean complex, as they call it, between China and the U.S. We'll see. You have the embedded reading. You've got an outside day up until today's lows taken out. The bulls took over control. When I look at these markets, what we do is we write a lot of research, especially if you're a grain trader. So if you're a grain trader and you're looking to say, okay, what's going on for the elevators, what's going on for the processors, what are the speculators doing, managed money, what's it doing according to the CFTC and so on. We cover it in all these details. And we write, unlike a lot of firms, we write over the weekend. You get Saturday reports, you get Sunday reports. We have a staff that's writing, catching on what's going on. Remember, Asia's not waiting for everybody, although right now they're on vacation for a week with the celebration of the 70th anniversary of the Communist Party. I also want to say something. I want to wish everyone out there a happy Jewish New Year that is Jewish of that faith. Tomorrow will be the important day, and then it's business as normal. But in any case, what we've got, if you want to find this, all you need to do is go to iraepstein.com. Go to our free offers. That's where you have to sign up. Then you start getting these in your email box, and we can even give you access via our platforms. You can click up here to sign up as well. I'm Ira Epstein. You have a good day.